This is Alan Farley from FX Empire. Delta Airlines reports earnings next week, kicking off earnings season for airline carriers. Looking back, the stock topped out in 2018, right up in the lower 60s. This happened right as President Trump fired the first shot in the trade war with China. The stock then failed a number of breakout attempts all the way into January 2020 when it posted this modest little high and then plunged during the pandemic, dropping to a 7-year low. Now, price action into 2021 followed sort of this rising channel pattern that stretched up and over the 200-day moving average and then settled right along the moving average in February and March. The action also just about reached the 786 a sell-off retracement, which is where recovery efforts go to die many, many times. And the stock then rolled over and fell along this trading floor here right around 43. Now, as you see, it hasn't really broken this line yet. Well, I'll take a look at it. Let's move this line right over here and see if we've broken this line yet. And sure enough, it looks like we perhaps have broken this little trend line here, which kind of makes sense when you see sort of this limp action. In addition, unbalanced volume, which is accumulation, has now dropped to the lowest low since September of 2020. Well, that's what, almost 10 months ago when the stock was trading right here about $30. So it's kind of a dangerous situation going into earnings. Now, the TSA reported excellent leisure travel over the weekend, a holiday weekend. It was higher than 2019, but United Airlines has told analysts recently that business travel is still 60% lower than the pandemic. We could partially blame the pandemic for it, but we could also blame Zoom and other virtual meeting spaces because corporations save a ton of money using that instead of sending their employees all across the country, all across the world. Now, business travel should improve, but will it improve to 2019 levels? You can see where the stock was trading when things were good. The industry itself may be sort of back to its old games where it has limited profitability, especially in the face of rising fuel prices. So I think we have to take a very defensive view because the stock could roll over here and come down and fill this gap between about 31 and about 34.